Okay, so Greg, walk me through your playbook for having this conversation with a founder, because everyone hates negotiating. It's like a universal human thing. But to be a good steward of the fund that you're managing in the community, you have to walk through this reality with founders, particularly local ones coming out of Charlotte and the Triangle area. Like, how do you have this conversation with founders? And like, yeah, I'll stop there. I have another question afterwards. But like, walk me through what that conversation looks like and how to do it well.
First of all, it's very hard. And it's hard because any conversation to the founder feels like you're negotiating with them, right? And there are some, so it's hard to say, hey, look, first of all, I try to acknowledge that. What I'm about to say may feel to you like I'm negotiating with you. What I'm really trying to do is have you understand the founder math side or the investor math side, because I think that's going to benefit you generally in your capital raise. And, ultimately, so and I used the $50 million example, right? And the math I walked through with you. And first of all, let's acknowledge creating something with $50 million of value, going from startup to I sold this thing for $50 million. That's an amazing outcome, right? And everybody who signed up for that journey super early, like whether they're employees, the founder, the investors, whatever, that should be a financially rewarding experience for that entire group. It should be. And so let's walk through the math. Like, there's one here, a company locally. So they were trying to raise on a $20 million post-money safe, typical pre-seed profile company. I'm like, look, so even if you have no dilution going forward, that's your $50 million exit, which is amazing, is 2.5x our money. That is a neutral overall influence on the return for our fund, right? Now, let's think about, let's list all the companies that we can think of from Charlotte that exited for more than $50 million in the last 10 years.
For fun, could you give me a couple? I would love to hear that list if you have it on hand.
Oh, I mean, sure. So there have been, there's a company called Passport here locally, Passport Parking, that, they're in the middle of their deal, but Pazer has been over that. You Map Anything. You had a big company like Avid Exchange was a big one. They ended up with an IPO. So there've been companies, but the point is you get to about 10 and you're done, right? And that's sort of, okay, let's say that's 10 over 10 years. So one company that pops up in Charlotte, one company that is formed in this space, it's sort of, let's say what we think of as a startup community, is going to exit for $50 million per. Now, half of those as investor, we probably can't access because, they're multi-time founders. And so, maybe they do the angel round themselves. Like, they're not going to raise 500,000 or $1 million from anybody. They just do that, right? Because they exited their last thing at good money. And so they're just not going to bring other people onto the cap table at that point. So try to be transparent with the founder about, and like, look, you need to understand, Mr. Founder, that other investors this math is going through their head while they're talking to you about your deal. They may not verbalize it in the way that I'm doing at the moment, but it's going through their head, right? And that's what they're thinking when you say 20 million post money on the safe. And when you say things like, well, we don't really want to price the deal yet, whatever. I'm like, hey, as an investor, I want to price the deal based on the risk profile when I'm deploying the capital, not in some future date. I understand why you would like to price it later when the risk profile and the value of the company are in a different place. But that's not like, shouldn't my capital be priced at the point in time when I'm taking the risk? It's hard to argue with that notion. No, you should price your capital in some future state, right? Because who would do that? Who would knowingly go into that business? I'm going to deploy capital, and I'm going to lend money, and then we're going to price it based on some future date when you're more credit worthy and therefore worthy of a lower interest rate, right? You wouldn't do that as a lender. And so, try to have that conversation, try to be transparent about it. Most of the time it lands pretty well, I would say, right? Sometimes it's just, hey, you sort of have to part with, we're not the right partners for one another. And that's okay too.
A quick note before we continue the conversation. Alongside the Diligent Observer podcast and newsletter, I also run an outsourced operations service specifically built to serve angel networks. My team handles things like initial screening, social media, newsletter prep, platform management, and a whole lot more. The kinds of things that either aren't getting done or shouldn't be done by busy community leaders. If that sounds interesting to you, send me a note. Now, back to it. I think what makes this so tricky is the two things. One is the asymmetric nature of this whole thing. I think that there's a general understanding of the basic portfolio theory. And of course, every founder thinks, well, I'm going to be one of those 10, obviously. And so this is a steal. I can basically convince myself that that's the case at any price. And then on the investor side, the same tension is there, the same pull is there of like, okay, well, instead of thinking about it as tactically as you are, it's like, could this turn into a 10 or 50 or 100x? If I think the answer is yes, then it kind of doesn't matter to me. And so you have this whole pool of people that are taking that asymmetric kind of idea, writing the check and moving on, which I think is probably part of what's pushing up the standard valuation levels at this earliest stage, which has been really interesting to kind of observe alongside you. I haven't been doing it as long, but just in the few years that I've been in the space, kind of seeing that just as more people are getting excited about very early stage investing, it's naturally pulled the averages and medians upward, which has just created some unique challenges.
Yeah. Pricing and value. And it feels, and not just it is so personal for the founder, right? Like this is, you're telling, it feels like, hey, I'm having this conversation with you, Ms. Founder, because I view you as not as worthy or as talented as somebody else, right? I mean, it's hard. And sometimes it's not that. Like I'm having this conversation with pretty much every founder you can think of at this stage. And there are a lot of them on the front end where, they want to pitch to our group and I get the dynamic, hey, I'm going to throw out a price. We can negotiate it later, all that sort of stuff. And I'm trying to be a good steward of their time and ours and say, look, what I'm telling you is I don't think I'm doing you a favor if I let you stand in front of our group and pitch your company with that as the ask. Because they're going to forget about all the amazing things about your company, and they're just going to say, they're going to think, no way, we can't do that. Like we're also, to a degree, we're not lead investors. Our check size isn't typically putting us in that position. So we're sort of price takers. So it's not like we're going to be able to negotiate this thing. Maybe the deal changes over the course of our engagement with the company as they get more market feedback and all that. And so, but I certainly can't bank on, this deal is going to get 50% cheaper, right? If that's what it would take for it to be reasonable for us, like it's not a good use of their time or ours to let them pitch to our group, right? Like where's it going to go?
Thanks for listening to this episode of The Diligent Observer. I'm your host, Andrew, and if you're an angel investor looking for essential angel intel in 5 minutes every week, I think you'd enjoy my newsletter. I send my best stuff, interesting deals, and more straight to your inbox so you never miss a thing. Subscribe today at thediligentobserver.com.